In the real estate world, the first advantage we will hear about owning a house is building equity. For a long time, before I became interested in real estate, I didn't know what home equity was. It was only when my family and I decided to move from renting to home ownership that the real meaning of building equity unfolded. As a newbie, you need to be aware of the terminology used by real estate professionals and see how home equity can impact your financial situation. In this video, I will explain what home equity is, how it works, and how you can build one. Welcome back to our channel. I am Sylvie Abasso, your local real estate agent in Texas. Our channel provides all the information you need to navigate the real estate market. Also, I give some tools of lovely places you can try out when you visit or move to Fort Worth, Texas. Before we get into the details, let's understand home equity. Home equity is the difference between the current market value of a property and the amount the owner still owns on their mortgage. It represents the owner's ownership stake in the property. There are a lot of big words here. Let me unpack with an example and you will see how home equity works. By following the chart, let's say in 2024, you buy a house for $300,000 with a 10% down payment. Your mortgage will be $270,000. The market value is the amount to sell something on a given market. It is what the house is worth. So if the market value is $310,000, your home equity will be $310,000 minus $270,000 for a total of $40,000. If we follow this chart, 2 years later, in 2026, the market value will be $360,000 and the home equity will be $100,000. And in 2030, the market value goes down to $320,000 for an equity of $80,000. This is an illustration of how home equity works. You noticed that the home equity depends on the property's value. So if you want to buy a house, make sure it is priced well by working with a real estate agent and not skip the appraisal. Now that you understand home equity, the next obvious question is how you can build your home equity. You can increase the value of your house by lowering your mortgage or increasing the value of your home. On the mortgage side, you can decide to make a substantial down payment to lower your mortgage or pay down your principal by making monthly extra payments. The value of your house can increase through normal appreciation due to the market, or you can also make some home improvement or renovation. Please note that not all renovations are equal. The National Association of Realtors produced some statistics on the estimated return on remodeling in 2022 to give you some ideas. You can see on the screen the impact of the renovations inside and outside the house. I will put the link in the description for those who want to read the article. Now that you have built your home equity, how can you get it out and use it? There are 4 options available to you. The first way to get your money out is by selling your house. If you sell your house at $360,000 and your mortgage is $260,000, the $100,000 will be given to you. Please keep in mind the closing costs and the other expenses related to the sale. The second way is to take a home equity loan. This is a fixed sum of money loaned to you based on your home equity. You will be given a fixed interest rate, usually lower than personal loans or credit cards. The loan will be repaid over a set term. The third way is to request a home equity line of credit. This is a revolving line of credit based on your home's equity, similar to a credit card. You can withdraw funds as needed up to your limit credit. Minimum monthly payments required, but you can also make larger payments to reduce the outstanding balance. The fourth way is the cash out refinance. In this case, you refinance your current mortgage for a higher amount and receive the difference in cash. Let's say your house is worth $360,000 and your current mortgage is $260,000. You can refinance your house with a new mortgage of $360,000 and $100,000 will be given to you as cash. All these methods to pull money out of your home equity have pros and cons, so it is important to carefully assess your financial situation and goals before choosing a method to access your home equity. This information is not financial advice, so please consider talking with your CPA or financial advisor to discuss your options and make sure you are making the best decision for your situation. Thank you and subscribe for more real estate tips. I will see you next time.